YouTube, what it do? It's Lil Petty coming back at you guys with another stock market episode. So it's been a long time. I know it's been a while. People have been asking me, where's Lil Petty been at? When are you making another YouTube video? So I'm like, you know what? This is probably a good time to make a video. We're in the midst of the markets and the volatility. So why not drop a YouTube video and give you guys an update of what's been going on? So that's what we're gonna do. We're gonna start off right over here. As you guys can see, the markets they're up today. Everything is green. A rising tide moves all waves. So as you guys can clearly see, we got the Dow's gonna be up, Microsoft, all these stocks, UNH up 8%, Exxon up 6%. We got the Apples, the Visas, the Microsofts. We got all the stocks, everything, even even the Russell 2000 was up today. So, but let's look at some charts, man. I know it's been a while. It's gonna be a little rusty, but I got some notes. I got some updates. I got some updates for you guys. Accounts have been blown. We had to take some step back. Just there's a lot to talk about. So without further ado, let's just get into the charts and let's speak on what's at hand right now. So right now, as you guys can clearly see, we had this major dump in the overall market. This is SPY, and we came down. I think it was it was close to a 30% drop. Yeah, we came down and dropped 34%. And a lot of people, there was a lot of skeptic. And so let me back up. When we were up in here and we had got this bearish cross, I was in the market, but I wasn't really focused on noticing that we were actually, about to get this massive dump. Now, nobody knows that the coronavirus, I mean, some people made a lot of money during this, but as this is where I messed up right here, I had bought calls on this bounce, and I got a little bit of profit, but I was buying stock because I thought this was going to be the for sure rebound, and I didn't get puts when there was a clear opportunity to actually make a lot more money. So, but as the whole time it was going down, when we fell, I said I'm not buying no puts because I've already missed the move. So me personally, I was just gonna say, all right, I'm gonna wait for the bottom to hit, and when we get a trend change, I'm gonna buy calls. I'm gonna be buying stocks. I'm gonna be buying shares, but I'm not buying no puts. I'm not gonna get caught up into this because if you guys remember, let's go back to the 5-year chart. Now I've been in the market since 2017, right around the beginning of 2018, and I remember this pullback. And my first time, I sold out of some of my shares. I had bought Amazon stock for I think it was like $1,300 or like 13 or in between that range. It went up and then it went down, and I sold because I was scared. I was a new investor. And then also when we had this other massive crash at the end of 2018, I remember I had puts. I made money on the way down, but I was buying puts on the way up. So I lost a lot of money, and I missed out basically on this whole bull run. It was just like, I don't believe it. So this time around, I said I'm gonna play the charts. Of course, always play the charts, but I'm more seasoned because this will be going on my 3rd year in the market now. So it's just an understanding of the charts and the psychology and knowing where to place your trades at and put your money down when you're ready to actually make trades. So that's just the short scope of it. So, but as you guys can clearly see, I got these blue lines down here because we're looking at this as a buying area, and this is the weekly chart, and we came down to this 217, but I want to say that was in a pre-market, so but people weren't really buying in that area. But yeah, so as we'll go back to this daily chart, you guys can see we are above we're about to cross on the 1226. He's still using the same moving averages, the 12 EMA 26 simple, and we're about to get this bullish cross. So we're watching out. We have bounced up, but like I said, I'm already in calls right now. I've taken profit. we'll go over a couple of trades. But what as of right now, it would be nice to see some type of pullback. But I wouldn't be surprised if SPY comes up to this 280 before we even see any relief rally pullback. So that's it for what we see on the daily chart and overall what's been going on. But yeah, this move right here, that was a good chance to make some money. I missed out on that, like I said. And also being patient. If you don't have patience, sometimes you'll get into trades and you'll end up not getting the big picture. So like a lot of people right now, they're probably buying puts in this area and probably still trying to buy puts, when in reality we're kind of showing that the market has been priced in. Let's go look at the VIX. And as you guys can see, the VIX has stormed up, and we're actually downtrending now on the VIX. So I'm gonna just go ahead and get into some of these plays. I'll talk about some of the plays that we have right now in the main account. So I'm gonna go ahead and show you guys just everything. I'm gonna just be straight up 100. This is my portfolio, one of my portfolios. This is like my main account. As you guys can see, Caterpillar's up 20%. We have 2 shares of this, and we were nibbling. Like I said, we were nibbling on stocks as the market was going down. So we bought 2 shares of Caterpillar. We bought 1 share at $89. You know what I'm saying? So we were buying in the midst of all of this bad news. We bought some Facebook. We have calls on Facebook. We're gonna go over those on the charts. We got Kron, whatever. Uber is my biggest investment right now with 46 shares, and yeah, we bought some Uber at we bought Uber at 16. Yeah, you know, we bought some Uber at 16. Yeah, so yeah, man, everybody was kind of, you know, like, and this is when you're seasoned. I'm not saying I'm seasoned. You know, I'm still a premature stake. But what I'm saying is, when there's fear in these markets, you need to buy, because there's gonna be those chances. I missed Uber at $13. You know, I was looking like, man, I could have bought, you know, 20, 30, 40 more shares at such a cheap price. But now that Uber's back at like 27, we're not. I like Uber, but the fact, I think it's still the psychology part of, once you know of how low the price was, and once it starts going up, then it's like, man. But we got a share of Walmart, Procter & Gamble. I like Disney. We got calls on Disney. Starbucks. Starbucks is one of my other biggest investments. I like Starbucks. McDonald's, Snapchat, Boeing. We bought shares of Boeing. I want to show you guys this. We bought shares of Boeing at 118. We bought 5 shares on the dip. And my other bigger holdings is ExxonMobil, and that stock has been crushed. We started buying this at $63. Started nibbling in, and we ended up buying 5 more shares at 38. And now the stock's up, but I'm still looking. I kind of like those oil stocks, Chevron, Abbey Vibe, and also Square is one of my bigger investments. So, and then I bought some weed stocks, and I'm down. Look, I'm down 65, 50, but I only spent like a couple $100. So this is me actually just building up some type of portfolio, because in my past, what I would do when I first got invested in stocks, I had a portfolio. I didn't know how to trade options and stuff. Then what I ended up doing was I ended up selling my portfolio and trading that money away, and then I ended up blowing that money up. And then what I would do, I would just funnel money into some of my accounts. So, you know what I'm saying? I would just have some money to play around with, build up some money, blow it up, build some money up, blow it up. That's what you get with options. But when you buy stock, you're actually kind of giving yourself a long-term perspective. So for all you traders, you guys need to build up your long-term portfolios, because if you're not building up your portfolios and you're only trading, and if you're not a very successful trader, then you're not really gonna. And even the most successful traders, they have a long-term portfolio. They either have an IRA or something. They have passive income coming in. It's not that you just want to sit at the computer and trade all day, because as you can see, the long term is still gonna return gains. So, but we're gonna go ahead and get into some of these charts, because I know you guys like to look at the charts, and I'm gonna show you guys some of these trades that we are currently in, and we'll go over the option trades and talk about And we'll just talk about some of these trades that we have got in right now, and that we're actually, and some of the strategy. So the strategy that we've been focusing on right now, we still do the credit spreads, but that's kind of on pause with the Tastyworks account, with PD rules and other issues. So right now we're kind of, like I said, let me slow down. So back to the calls, because right now the market has been on the dip. So we've been looking at longer term calls to take advantage of some of the premiums, because as you guys can see, like for this one right here, Abbey Vibe, a May contract. So these, and then I have my trades on here. So this, I made this trade on this day in between this candle sometime, and we are pretty much break even on it right now. But as you guys can see, some of these calls have been smoked because they have been dropped. The price of the options have been dropped because of the price of the stock has went down so far. So what we're trying to do is take advantage of these basically longer term calls, and we're looking to get time. So like on this one is 36 days, and that's not too much time, but it's an $85 strike. And if you come and look at Abbey Vibe, well, as you look right here, Abbey Vibe was trading at $90 just a month ago. So we're looking at plays like this. So we have a call on Abbey Vibe. We got smoked on some Boeing plays. I've been averaging down, but my positions have got smoked. Like this 345, I actually bought this at the high, which was pretty foolish of me to do, because I kind of got FOMO, because I think a few days I had wanted to buy it or whatever, but I have the shares regardless. But still, we're trying to take the money and still, make money by trading long-term options. So we bought this at basically the high. We spent $1 for this. These are trading at, these are graveyards. So we're kind of holding on to this 345. It's made 20 to 36 days out. Because we had seen the volatility spike. And these options, these are trading at 20, 10, 3, 4. There's so much profit range. So that's kind of the what I was looking at. And then so what I ended up doing was average down on these 265s. I bought these on this day, as you guys can see the little green arrow. So I spent like $1. These ones have got smoked too. We're down, I think, 80 something% on those, $80. And then what I ended up doing, I ended up going out for some more time and got some more, got a closer one to the money. So I'm kind of betting on this 250 one to hit. So this one might potentially get us back to like maybe $6-7 if this one rips up and it has more time. So that's the play on Boeing. We missed out on the play on Caterpillar that I had basically called out, and I was so mad because I had ended up spending my money on, buying some other stuff or whatever, and I had missed out on the Caterpillar play, and that one went up like 1,000%. But I'm gonna just show you one of the calls. It was the January 15th, so it was 281 days out, and it was the 155 call, and we were looking at these when these are trading around 70 cents, and now they're trading at about, they went up to as high as $4. So this was a play I was looking at, and there's just been a lot of like right now, it's late right now. This is the time I like to actually like look at stuff, go through the options, and try to just dig deep and find some plays, because you can come, if this is like the time that I'm like most like my brain works good. So it's like, I get to zone in. I spend like 2-3 hours just going through option chains and looking at the plays and how the options have fluctuated to the price, and we look for plays. So a play that we did just make was Microsoft. I ended up buying, I think it was, I want to say it was a weekly. This one, I think it was the 167.5. I think it was this one. Yeah. Yep. So right here, you guys can see my trades on here. So I bought this on this day. It was a swing trade, and then I ended up selling it for like $5. I bought it for like $1 or something. And this because basically Microsoft had went up, and then the next day it went up to like $7. But I was like, I didn't want to hold it. I just wanted to take my profits and run. So that's, and yeah, if you guys can look right here on Microsoft was trading at 130, went up to a high, and that's just, so let's go, let's look at this daily chart. And what I was basing my trade off was we have already came down, and now we're kind of flattening out. Premiums are coming down. We got the cross, the 1226 cross that I love to make my analysis based off of if it's going to be a good trade or not. Not saying I'm just going to take the trade because the stock can still pull back. But as it was about to cross is when I got in. I said, "Yep, I think we're gonna break bullish," and we did break bullish. And I put my money where my mouth was. You know, I put $100 down. I made $500. So pretty simple. Now, I did take notes of everything I wanted to do. Yeah. So overall, let's talk about some goals. So, some goals that I do have right now is to save up a certain amount of money. I'm not going to disclaim it. I just have a certain amount of money that I'm looking to save up for the year and implement that into another investing opportunity. I have my 10-year goal plan laid out. So, and the reason is because when I was trading, I had a major setback, and that kind of it shook my life up to basically understand, like, you know, you need to be more safe with this. Trading is really risky. You can lose up all your money. And for me to come on and tell you guys this, like, I know a lot of people have lost money, but it's like, you know, if you lost, you know, 10, 20, 30, 40, $50,000, you know, like, there's some people, they don't recover from that. But the thing is, you got to understand that if it all depends on what type of person you are. So, and that really it plays out to some of the plays that I miss. It's like I get mad. Like, for instance, I got mad about that Caterpillar play, because it was like, man, I had the play, and I ended up I didn't have the cash in my and then the next day, there's actually a couple other plays that I missed out. I missed out on the Square calls 2 days ago, and the Snapchat plays, or the where are my notes at, and the Uber calls. So, but you got to understand, there's always going to be opportunity in the market, and just looking and scouting and sniping, that's going to be your best opportunity. And right now, I feel, like I said, I'm kind of waiting for a pop, and then we might go ahead and buy some puts just for protection on the long-term account. But that's because we've seen a bounce, and some of these stocks I feel are going to just keep running. So let's look at a few more. So we got the Disney. We got the September 20 Disneys. We got these. These are actually down basically a little bit. So we bought these. Let's go ahead and maximize this. Well, we bought these 2 days ago at $1.16.80. So we're kind of looking for Disney to make a move back up towards this 130, 120 range, and then these premiums should basically go up. We got 162 days on those. And then on the Facebook plays are actually doing pretty good right now. We bought these at 70, the 205s. So we bought the Junes, the 205s. We bought these at 70 at $1. These have 71 days left. These are up a little bit, a couple percentage. As you can see, we bought them over here. The stock's trading right there, or the option. And the reason I'm going out longer term is because a lot of these calls are still cheap right now. But as the stocks are starting to move now, the premiums are going to go up. So that's why I'm kind of basing my trade off what was the stock doing, you know, a few months before the drop. Because, and then even if we get back up into this 200 range, these contracts are going to be inflated. So I'm looking at this as a long-term investment, and I'm holding shares on most of these plays. So regardless, even if the stock goes up, I'm going to make money, but I'm just placing bets to try to actually gain more for littler value. But we're going out long-term. Like, I have a 260 a January, and you know, all we're looking to do is kind of just flip the premium. We're not going to hold this, you know, until expiration. But as you guys can see, these were trading at $5, $6, $7, you know. So there's opportunity, and what made me go down that is because I was looking at some of the puts. Like, if you look at like these 90 puts, These are trading at 28 cents and they went up. It was just a matter of, are you holding any type of long-term puts? And that's the crazy thing. You could have been so far out the money, like Facebook, these 80s, or these hundreds. Nope. Let me look at the time. Let me go look at these ones. Like, these are still 90. These are still expensive, and these are trading at 60 cents. So it's just, going through those options and figuring out what you want to do. I showed you guys the account, basically the main account, everything that I have in there. We're actually down 7% right now on the total account, and that's due to the market's coming down. But I think that's it for this video. Honestly, I talked a lot. I gave you guys an update, and I think I'm gonna end this video right here. I'm gonna go ahead and probably drop a couple more videos, and I'll keep you guys updated. But hey, that's Lil Petty with another stock market episode. Y'all have a good one, and I will tap in with y'all later.